Now the topic before us is public, private and cooperative, understanding the key types of banks in India. In India, there are different types of banks which are working and they provide services to general public, businessmen, agriculture, etc. There are various types of banks which operate in our country to meet the financial requirements of different categories of people engaged in business, agriculture, profession, etc. Now, from this picture, you can see that there are different types of banks which are working in India. Above all, there is central bank. That it does not directly deal with the general public. It is the main bank which supervises the working of all other types of banks. It forms the broad guidelines which other types of banks have to follow. There, the other types of banks are commercial banks. Commercial banks are further of four types: public sector, private sector, regional rural bank, foreign banks. Then there are cooperative banks, specialized banks, small finance banks, and payment banks. We will have an overview of each of these one by one. First is central bank. In each and every country, there is a central bank to regulate the banking and financial sector of that country. In India, we have Reserve Bank of India, which supervises the working of the banking and financial system in our country. Reserve Bank of India or the central bank manages the country's foreign exchange reserves. There is only one central bank in the country. We should not confuse central bank, that is RBI, with Central Bank of India. Central Bank of India is a commercial bank. Here we are talking about only central bank. This bank does not deal with the general public. We cannot go to Reserve Bank and deposit our money with them. Only the commercial banks can, or the banks can deal with the Reserve Bank. It advances money to other banks when needed. We will also later on understand how the central bank or Reserve Bank of India is known as the last resort of the banks. Now, commercial banks. These are the financial institutions which serve as the backbone of the modern banking system. Why they are called the backbone? Because commercial banks provide a large number of services to the customers. The customers may be individuals, businessmen, organizations, laborers. How do they provide services? By way of deposit accounts. You may be having some money with them. You cannot keep all your money at your home. You go to the bank and deposit your money with them in the shape of deposit accounts. If you require money for your buying a car, for buying a housing, buying a house, for setting up an industry, for setting up a small level shop, for small scale industry, medium size industry, you can approach to commercial bank for a loan. Banks also provide the service of in electronic fund transfer. Now, gone are the days when for making payment you have to travel a long distance to make payment by hand to the other customer in the form of physical notes or currency. Now you can go to bank and ask the bank to transfer money in the account of some other person whose account is say 1000 kilometers away in some other bank. Generally, the commercial banks are profit oriented entities. As you know that commercial banks are having a offices in many cities throughout the country. They may be having thousands of persons as their employees. They have set up a huge infrastructure. They are spending a lot of money on technological upgradation every year. They have to incur expenses on marketing, advertisement, or other expenses. So they have to earn profit. In the case of public sector banks, the profit may be small, but in the case of private banks, profit motive is more. The services of the commercial banks are very important for the functioning of an economy. If we see a large number of organizations go through their balance sheets or and other account financial records of the big organizations, you will find that they have taken loans from the banks to run their operations. So if the banks do not provide loans, all these industries which we see today cannot perform. There will not be any economic development in any country. In India, the commercial banks are governed by Banking Regulation Act 1949 on the basis of ownership. Who is the owner of commercial banks? We can broadly divide commercial banks into four types: public sector banks, private sector banks, regional rural banks, and foreign banks. Now we will have an overview of each of these four types. First is public sector banks. These banks are those banks where majority stake is held by the government of India. Majority stake means they are the government of India is having say more than 51% shares with them. They are having the full powers to run these banks through Ministry of Finance. Most of the public sector banks are already listed in the stock exchanges of India. Public sector banks typically have a strong focus on providing affordable banking services to a broad section of population. As already discussed, in the case of private banks, their main motive is to earn maximum profit. If you are having an account with a private bank, you will see that the service charges are higher. They may be charged some money from the customer for each and every type of services, and that services charges are also on the higher side. But in the case of public sector banks, their main profit is to provide banking services to maximum population, and that too at minimum charges. Their main profit is not to earn profit. Now Private sector banks. The private sector banks are the financial institutions which are privately owned and operated by private individuals or corporations. These are few private sector banks such as HDFC, Kotak Bank, ICICI Bank, IDFC First Bank, Yes Bank, and many more. They are profit driven. Their main motive is to earn profit in one way or the other. But one thing is certain, that these private banks have spent a lot of money on the technology. They are known for their efficiency and innovation. Now, regional rural banks. Regional rural banks are a specific category of banks which have been established in India, provide banking and financial services to rural and semi-urban areas. Who is the owner of regional rural banks? These banks are typically sponsored by a nationalized bank, the respective state government, and the central government. It means that if a particular bank, if a regional bank is situated in a particular state, some nationalized bank, central government, and that state government will have share. Each of these will be having some share. How much share they will have? Central government holds 50% share in regional rural bank. The concerned state government in which that regional rural bank is established has 15% share in regional rural bank, and the bank which has sponsored the regional rural bank has 35% share in the regional rural bank. So now comes the foreign banks. Foreign banks means those banks which are having their headquarter in some other country and are having their operations in many other country, including ours, that is India. These are the names of few banks: Standard Chartered, Bank of America, HSBC, which are having their headquarter in London or in USA. There are the list of foreign banks in India is very large. These are a few names. Out of those, foreign banks are subject to regulatory and supervisory framework of the host country. It means that though the foreign banks work as per the guidelines of their parent headquarter, but overall they at the same time they have to follow the rules and regulations of the central bank of the country in which they operate. In if we talk about India, these foreign banks have also to comply with the rules and regulations of Reserve Bank of India. These foreign banks facilitate cross-border trade, investment, and financial transactions. Now, cooperative banks. Here is the list of some cooperative banks which are working in India: Saraswat Bank, SVC Cooperative Bank, and Abhyudaya Cooperative Bank. These banks are those financial institutions that operate on a cooperative basis, and the ownership and control of these banks is shared among the members. These banks are governed by the State Cooperatives Act, Cooperative Societies Act. Cooperative banks prioritize the financial needs and interests of the members. Cooperative banks also come in many forms, just like commercial banks. They come in various forms such as credit unions, rural cooperative banks, urban cooperative banks. Now, specialized banks, as the name suggests, these are those banks which have been established to provide services in some particular area or to some specific type of industries or sectors. These are the financial institutions that focus on some specific niche areas or sectors within the banking and financial services industry. For example, development banks. Development banks such as IFCI, state financial corporations, these are the development banks which have been established to promote economic development in specific sectors or regions. Export Import Bank is also a specialized bank which facilitates international trade. Its main focus is to help the exporters. If we talk about SIDB, Small Industries Development Bank of India, its main purpose is to provide banking services to small scale industries. In the case of NABARD, National Agriculture Bank for Rural Development, their main purpose is to provide services to agricultural and rural sectors. Now, small finance banks. These are a different category of banks which are of recent origin in India. They are established to serve the unbanked and underbanked segments of the population, including small businesses and low income individuals. That is, their focus is on small businesses and low income individuals. Here we have given examples of AU Small Finance Bank, Equitas Small Finance Bank, and Ujjivan Small Finance Bank. Now comes payment banks. These types of banks are relatively a very recent origin in India. They can carry out most of the functions of the banks, but they cannot advance loans. They cannot do advancing of loans, and also they cannot issue credit cards. They can simply accept demand deposits, that is saving account and current accounts, but not time deposits. As already told, time deposits are of two types, fixed deposit and recurring. They cannot accept fixed deposit or recurring deposit. These types of banks rely heavily on digital and mobile technology to deliver their services. Here we have given some examples: Airtel Payments Bank, Fino Payments Bank, and Paytm Payments Bank. Bad bank. Government of India is taking steps to set up bad bank in India. Bad bank is that bank where we cannot go to deposit our money and they will issue us loan to some other or to some other persons. They will not deal with deposit or issuing of loans. They will deal with non performing assets of the banks, that is NPAs. Government of India is in the process of setting up a bad bank in India, and that bad bank will be called National Asset Reconstruction Limited. Bad bank will not involve in lending or taking deposits like traditional banks. It will buy bad loans, that is NPAs, from the banks so that their balance sheet is clean. The categorization of banks can differ from country to country, and some banks may fit into multiple categories based on their operations and services. Thanks for watching. If you like our course, please spare some time to give a star rating to our course.